day above 24K, at least that's what the Q seem to be indicating. Let me go across. Ruchit Jain also joining us from Motilal Oswal Financial Services. Kunal Bothra continues to be with us. Ruchit, hi, welcome, good afternoon. Give us a sense, how are you viewing the market move today?
Yeah, hi, very good afternoon.
Very good
Well,
afternoon.
overall, no things to be seem positively placed because last three trading sessions we did see some pullback move from the highs in the Nifty. 24,000, 800 was a good support zone which has still been intact. And even during the corrective phases, the broader markets were not doing that bad. So I think today also we can see that the stock specific buying interest is quite good, especially from the mid cap and the small cap segment. So on the index front, we think that till 23,800 is intact. The index has potential to rally higher towards 24,750 going ahead in the short term, which is the 61.8% retracement level of the entire previous corrective phase that we saw. So I think the risk reward ratio still isn't favorable to create fresh longs. For a short term, 23,800 should be kept as a stop loss on long positions for potential targets around 24,750.
We've got Devash Vakil from HDFC Securities as well joining in. Devash, hi. Great to be speaking with you today on ET Now. Devash, help us understand from the March lows, what is it that you've turned bullish on?
Yeah, hi. Thank you for having me on the show. So we have been bullish on power, energy as a sector. Capital market plays and other we have continued to like. Technically, NBFCs and banks, we have added a little bit of weightage. Where we have slightly cautious, continue to remain cautious, is also vindicated by the disappointing numbers which we saw from IT. So that's where the expectations are belied and quarterly results are still waiting to stabilize. So that's where we are a little underweight. So capital market plays, energy, power, these are the areas where technically we should be overweight on.
Interesting that you say power. So help us understand in the entire supply chain, where within power do you find investable opportunities still?
So it's a long value chain. Obviously, the utilities which we like, there are opportunities on the power ancillary side where the grid upgradation in India and abroad, battery management software companies are there, and transformers and all. So there are pockets of opportunity, companies which are in this value chain. Larger cap like Power Grid, NTPC continues to remain in our large cap model portfolio, and there are smaller names as well, which I discussed.
Okay, interesting. Let's be all about Sun Pharma and the way that it's rubbed off on some of the other pharma majors as well. So Sun Pharma holding up 7.6% and the entire pack is looking robust. Most interesting has been Reliance's price movement because that's not how the stock started off the day. It started off in the red and then really picked up from there. And it's now perking up a good 2.6% as we speak. Even IT has rebounded from those, from that very vicious selling bout that you had last week. So Wipro, TechM, TCS still got a long way before they make up for last week's losses. HCL Technologies, but they're still at least nudging in the green as we speak right now. You've got an M&M higher by about almost 2%. Dr. Reddy's is looking good. Hindustan Zinc has moved solid after its numbers and the commentary from the management thereafter. 6.5% higher for Zinc as we speak. IndusInd Bank has been going very strong, a good 6.25% there too. Blue Star and Suzlon are some of the other names which are finding their way up in the green within the broader end of the market, which, by the way, is looking very strong. You've got an excellent market breadth at your hand. 182 is the count to the greens, but just 36 odd to the reds. And that's largely news-specific or earnings-specific kind of moves that you're seeing on most of those stocks as we speak right now. But Ruchit, curious to understand whether you think a large part of the selling in IT, at least temporarily, could be behind us?
Post the recent sell-off, the momentum readings of many IT heavyweights are in oversold zone. So this could be a pullback move within a downtrend. Too early to say whether things would change in for a larger move, but at least a short-term pullback towards 30,000, 30,500 on a Nifty IT index can be seen in the near term. So just take it as a relief rally as of now until we see any price volume action changing ahead.
Okay. In fact, let's take a look at how large private banks that have come out with numbers. It's also the NBFC pack the likes of an M&M Finance, the likes of a PNB Housing, some really strong numbers posted by some of those names. The interest rate cycle, we've likely seen a bottoming out of the repo. Do you believe that this is a time when you hedge your bets, maybe move out some money from NBFCs, or do you add on?
So relatively, we were quite overweight, and in a scenario where there are a lot of geopolitical uncertainty, the financials can actually sidestep the potential destabilizing impact of the higher energy cost. See, these companies, NBFCs, they have a diversified loan book. Some of them are skewed toward retail or housing or SMEs, and where their net interest margin will remain stable around 3.5%, 4%, even if the smaller companies may face input cost rise. So we are actually positive from a tactical standpoint of view that this quarterly earnings season we continue to like the BFSI space, large banks like ICICI, Kotak, SBI, Axis, or NBFCs, which you mentioned, capital marketplace. That's where we are overweight in our model portfolio. But eventually we will look to reduce our relative overweight as the earnings season passes and as these stocks move towards our yearly targets.
Well, the one space that everyone has been completely steering clear of has been the entire...
That has come out with numbers is an SBI Cards. And let me quickly take you through the numbers. Largely in line in terms of profitability versus consensus estimates. It's essentially the volumes, which are down 12% when I'm looking at it on a YOY basis, the new account volumes. And you're seeing some bit of softness with regard to the stock. Kunal, any interest at all in this one? I know, it's been a prolonged period of time since there has been any interest on the stock. And I'm trying to understand whether this is the right time.
Not really. It doesn't look like, Harsh, because even at current level 670, the stock is reeling at the lowest zone for itself over the last, I think, 6-7 quarters. 2024 also, I think the stock was trading at 700, 720 mark. Last quarter, the stock was almost at 650 levels, and so we are trading at 670 mark, which means comparatively over the last many months, the stock has been trading with a negative bias. And even at the current juncture, the indicators are still showing signs of a breakdown, no signs of a divergence emerging for SBI Card. So it'll be a lot more earlier to try and expect or predict or forecast that the stock would show any kind of a turnaround. We'll wait for those signals to come by, whether the stock breaks past above the immediate hurdle, which is around 800 mark for the stock in the medium term. That will be the first zone where it will trigger some sort of bullishness into the stock.
Okay, that's the take coming in on what you're seeing on SBI Cards right now. Metals, of course, has been one such a very strong pocket which has been holding out. But very interesting developments within the pharma industry. And no, it's not just about Sun Pharma's mega acquisition. It's Cohance as well, excuse me, which has hit an upper circuit after it named ex-Cipla top boss Umang Vohra as its new executive chairman and group CEO. In fact, Meryl is here to tell us all about this new appointment and what it really brings on the table for Cohance Life.
New rejig in the management space in pharma, where Umang Vohra has been appointed as Cohance Life Sciences chairman and group CEO. Now he's been appointed as the executive chairman effective 1st May 2026 and group CEO effective 20th May 2026 for a term of 5 years, which is going to be concluding in April of 2031. Now, Cohance says that Umang Vohra has been tasked with driving the company's evolution as a global leader in the technology-driven CDMO space. Now, coming to his profile, he's got at least 20 years of experience across India and the US just in the pharma space. He earlier worked at Dr. Reddy's for 13 years and has worked at Cipla as an MD and global CEO for a period of 9 years and almost 10 years, in fact, where he helped lead the company's North America expansion and also drove expansion in the India business, particularly in the lung development space. Now, US business under Umang Vohra grew at around 28% from earlier sub $100 million levels to now reaching up around $230 million, and has also set an ambitious target of around $1 billion in revenues while the company hasn't got there yet, he reaffirmed that the $1 billion revenue guidance still stands and remains directionally intact, even as the company navigated the phase out of generic Revlimids. Now coming to the India segment, he also drove a lot of growth there, and he made the India segment actually the key growth driver of the company as a whole, and it accounted for more than 40% of revenues under his guidance. Under his guidance, Cipla also expanded its respiratory portfolios and progressed work in antimicrobial resistance, and also strengthened the digital and manufacturing capabilities of Cipla. So Cipla has seen quite tremendous growth among Vora. And coming to now Cohance, it signals the ambition that the company's got by bringing him on board. And it's going to be quite interesting to watch, especially how the company speeds up and drives up its global presence under a leader who has experience both in India and US and has been monumentary in driving Cipla's growth in the US.
Okay, thank you so much for that, Meryl. Devarsh, a couple of big moves, right, within pharma. Cohance, of course, I mean, it's one of the biggest underperformers over the last 12 months or so. Do you believe that this leadership change should change things substantially, locked in upper circuit as a result of this?
Right. So we don't have that particular name under coverage, but as you mentioned, the quality of the management, quality of the leadership does make a lot of difference. And this particular stock maybe, as it has corrected from highs of 1300 or so back to 300 also, it is recovering. And obviously the good management coming in will play a role. But on a broader pharma question, I think Sun Pharma is a good example of companies which has cash on the balance sheet, which has resources, deploying it in order to get the global scale. Contrast this with what has happened into IT companies where they have hordes of cash and they have just used it to strengthen their balance sheet or announce buybacks. And that's where the market is giving thumbs up to companies who is using the cash to grow. So I think Sun Pharma's move will be appreciated by investors that they are looking to grow the business using the cash on the balance sheet.
Okay, that's the take coming in right now on what, that's the expectation coming in from Eternal. Rajit, wanted to get your check-in on, the fact that from 220, it's now recovered all the way to 250 thereabouts, but where do you think it could go from here?
Yeah, so pullback move has been seen along with the broader market in the last 2 days, but we have not seen that kind of high volume-based up move. The 200 DMA for the stock is around 270. So I think that's the major hurdle for the stock which needs to be taken out, that too with good volumes for any kind of change in the broader trend. So I think 270 would be keenly watched, whether it breaks after the numbers or not.
Okay, the other big one, in fact, in terms of both numbers as well as commentary, and that one is Varun Beverages. Very strong numbers, a firm beat versus what estimates were suggesting, and now what commentary seems to be suggesting is that, and management has said that they are holding inventory worth 6 months in this slightly higher inflationary environment, which means that you will most certainly see margins likely hold up. Of course, demand will also matter, but to some extent margins ought to hold up. More confidence there, just given the fact that they have raw material worth 6 months stocked up in a slightly more inflationary kind of environment. Devarsh, what do you make of the comments, if at all? I mean, of course, subject to your research clearing this, but it's just come through. Do you believe that if this were true, this is huge and this is big and the 5.5% stock move is warranted?
Yeah, we'll have to review what has just come, but we continue to have this stock under coverage, and as we continue to upgrade its target, it is going, the stock price goes blasted. Last we issued around 460 or so with a target of 500. I think I just saw that it has moved ahead of it. So over the past year, company has strengthened its manufacturing and continue to expand its distribution network. They have invested in brands now, used the QIP around 7,500 crore, which they raised last year, I think, to expand into newer areas. So we have the positive view on the stock, and it has recently gone past our target. The recent development I need to study before I can give any opinion.
Kunal, what's the take like on this one on charts?
See, I think Varun Beverages, I remember, I think the stock had fallen down to sub 400 in the recent price corrections for many of these FMCG counters. But this comeback of sorts for Varun Beverages above 500 mark indicates that it's not just a V-shaped recovery, but the stock climbing back above its 200 moving average is like resetting the trend for itself. Now, this comes at a point where many of these FMCG stocks are trying to show a very similar kind of a path for themselves, where there's a V-shaped recovery. Many of these stocks like Nestle, etc., these stocks have come back towards breaking their lifetime highs or making new highs for themselves. So I think in that backdrop, I would believe that Varun Beverages looks attractive at the current juncture of 520, even after third or the fourth consecutive weeks for the stock in terms of strong price uptrend. It's still way off from its all-time highs. I think 670, 675 is the lifetime high for Varun Beverages. So the stock, I think in that context, is still down 20-25% from those price points. I would believe that the stock at the current juncture looks attractive, and so is the case with many of the other FMCG names.
Kunal, does the underperformance of Axis and ICICI Bank today change anything for the Nifty bank construct?
No, I think it brings in the same context over here that we are in for a pause for the bank Nifty largely because of the construct. I think last week we had ICICI Bank, which in the first half did pretty well, but I think HDFC Bank, etc., underperformed. And then I think today you're seeing HDFC Bank and ICICI Bank and Axis Bank are the three names which are underperforming. And that's one of the reasons why you don't see that outperformance in the bank Nifty. I think it's a very temporary kind of a impact, I would say, for this composition in terms of the bank Nifty, because when you're looking at a point where the markets are gaining strength, you can't be at a point where the bank Nifty would underperform significantly. So either the PSU banking stocks have to do a lot of hard work and then try and cover up the underperformance from the private sector banking names, or else many of these private sector banking names, which are down 5%, 7% from their very recent swing highs, they would try and play a catch-up for themselves. I think it could be a mix of both happening. So my sense is that this dip for ICICI Bank and Axis Bank, I think ideally should be bought into.
Ruchit, what about an IndusInd? That one also doing very well for itself in trade today, those numbers coming through.
Broadly within the private sector banks, it has been a relative underperformer. We have not seen that kind of trended phase coming in yet. The follow-up move would be important. But before the numbers, the stock has surpassed its 200 EMA today. And the swing high, if you look at if in the last 3 or 4 months of pullback move was around 960, 970 kind of range. So it needs to break that 960, 970 hurdle for any trended up move for the stock. So far, just 200 EMA has been surpassed. So maybe 950, 960 could be seen in the near term. But surpassing that would be a key thing to change the broader uptrend.
Okay, just 2.5 minutes left to go before we wind down for the day. But Devash, Ruchit and Kunal, all three of you, thanks as always for joining in. We'll catch you again with the market action tomorrow, Kunal. But 190.